There's two important things to this strategy. Number one,
This next interview you're about to see is with Markus. He's been trading for over 20 years and he came from Germany over 20 years ago with just a few boxes. He then started Rockwell Trading out of his 2-bedroom apartment, and his most successful strategy that he is known for is the wheel options strategy.
The wheel option strategy, a fascinating strategy, very, very popular by many traders.
What makes this strategy so famous is it only takes a few hours per week to create consistent income. In today's interview with Markus, you are all in for a great treat because we're sharing screens and he's sharing that actual wheel option strategy with me. And since I'm new at this, you're gonna learn a lot because I asked tons of questions. Wow, this number really blows my mind. Over 75% of you who watch the show regularly are not subscribed. If you enjoy the show and want to support us, the easiest and also free way is just to hit that subscribe button. This will help us find new and better guests, and I promise you to continue to work at making this show better and bringing you more value. Welcome back, everybody, to Be The Trader. Today is gonna be great because you see we have the laptops out and we're gonna be diving deep into Markus's famous wheel strategy. And I'm gonna have tons of questions because, as you know, I trade equities, Markus, and I do not trade options, so I want to learn this. So Markus, thanks for being back on the show, bro.
hey, it's so good to be back on the show. It's awesome. Yeah, I mean, we briefly talked about it, and you said, you know what, why don't you teach me live on the show? And we thought that would be a great idea. So why don't we do it live on the show?
Absolutely. So take it away, and then I'll probably be nailing you with some questions. So let's go.
Okay, so I mean, we all know we don't want to buy stocks at the high, right? So if you right now take a look at Tesla, for example, and I'm going to zoom into Tesla that we see where it's trading right now. So recently it had this massive run up, and right now Tesla is trading at 322. And let's just say, you know what, we don't want to buy it right now. We want to buy it when it pulls back to 300.
Okay.
So there's two ways, right? I mean, what would an equity trader do? Just place a limit order to buy at 300. So this means that it pulls back below 300, you're getting filled. Now here's what an options trader does, because an options trader likes to get paid for every order that we place. So here's the deal. Right now, I can sell a put option at 300. And we see the data right here. I'm going to zoom in a little bit so that we see it. So this is expiring a week from now. As we're recording it, it's November 14th, just for reference. So we have kind of like, a week to expiration, a week and something. So this means that Tesla right now could drop 6%, and we're getting paid $3.94. So let's just break this down. There's a lot of data. So let's keep this simple. What does this mean? It's a different way of placing a limit order. So if I sell the 300 put as an option, I'm receiving premium. Okay. And we'll look at the numbers here in just a moment. Plus, if by November 22nd, in the afternoon, which is Friday afternoon, if Tesla closes below 300, I'm forced to buy 100 shares of Tesla at $300. So that's the deal. Options come in 100 packs. So you cannot say, I want to buy 32 shares of Tesla. No, you have to buy them in 100 packs. That's a little bit of the downside, right? So because it requires you to have a little bit more money. So here it would be $30,000. But we're just using Tesla as an example. We can use, I'll show you some cheaper priced stocks that I'm trading right now a little bit later. So anyhow, so we're selling the 300 put. And for this, we're receiving $3.95 in premium. It seems that it right now just changed because we're live. The markets are live, right? And we're receiving this times 100 per every option that we are selling. So before we dive into the numbers, is this making sense so far? Or because you said you got a million questions. You have never traded options before, right?
Never traded options before. And so that 360, does that mean that 360 times 100, so I'm making $360? Is that what you're saying?
That is correct. So this is where I like to add it to the calculator, because this is where I'm multiplying it with the size that I'm trading, right? So I like to to have a $100,000 position for each position that I'm putting on. So I would trade 3 contracts. So this gives me a little bit over $1,000.
Okay.
So $1,065. Since we have now 8 days to expiration, I can take the $1,065 divided by 8 days, take it times 360, divide this by the buying power that I need, the 90,000 here,
Okay.
and this is how I come up with the 47% per year annualized.
By now, you know our show is sponsored by Cobra Trading. I use them every day, and for good reason. I love the fast execution and the great customer service. And it's not just me saying this. Both Benzinga and Forbes Advisor awarded Cobra Trading best-in-class ratings in multiple categories for day traders. You can sign up now with the Be the Trader link below, and Cobra will give you 100 days of free commission, 3 months of free software, and 33% off commission for life. I know you'll be as happy as I am when you trade with Cobra. Now let's get back to the show.
Now, if I can do this all the time, right, and
Yep.
I do. I mean, this is what I do. I'm selling options. Anyhow, this way I can collect premium every week. Now, here's a really, really, really cool thing. So if right now I can collect, I don't know, $3.55 or $4, this automatically lowers my break even from 300 to, let's just use a round number. Let's say it would be $4 to 296 because I'm receiving the premium right away. So what happens on Friday?
Sorry,
yeah,
but
go ahead.
when you say you're receiving the premium right away, you mean like as soon as you put this trade on,
Right.
you immediately get paid that premium? Like it
Yes.
immediately goes into your account?
Yeah. Think about it like selling
Okay.
insurance,
Okay.
right? So I'm selling an insurance and I'm getting paid right away.
Okay.
So it increases your buying power.
Why do they do that? Just curious.
Well, you're taking the other side of the trade. You see, there are some people right now who are in this Tesla trade and they're selling a 300 put for protection, which basically means if the Tesla price drops to 220, for those people it doesn't matter, they always get out at 300, right? So that's basically what options do. They're kind of, especially put options, kind of protection for the big guys.
Okay.
So somebody wants to buy the insurance,
Yep.
so I'm selling it to them.
Okay. Okay. And then, so go ahead and continue.
Okay, so I'm getting this premium regardless.
Okay.
Whatever Tesla does, I'm keeping. And since this premium right now is fluctuating, we're just using $4 for this example. So I'm keeping $4 or $400 for
Right.
this one option, or since I would be selling 3 options, I'm
$1,200.
keeping $1,200, right? So if on Friday afternoon it is trading below 300, I'm forced to buy Tesla at 300.
Right.
A price that I like anyhow. So that's what I'm determining today.
Yep.
Today, Tesla is trading at 321. So I can buy it right now 7% below the current price,
Yep.
and I get paid $1,200 to pay it at a 7% discount, which immediately lowers my break even. Now, I only do this on stocks that I want to own anyhow.
Okay.
So because the goal is here to get assigned, meaning that I now own the shares. Because once I own the shares, I can do the same thing. Instead of selling the shares at a higher price, I sell calls at a
Okay.
higher price. So I'm getting paid. But it just,
So you're selling calls because now you got assigned.
right.
You have the position.
Right.
Then you sell the calls and you're collecting that premium.
Right. So let's just say, use an example here and say that right now we own Tesla at 321. Let's just
Okay.
say this morning we bought
Sure.
it. And let's say we want to sell it at $340.
Okay.
Right? I mean, making like what, 7 or 8%. So let's hop over to the calculator and see how this would pan out. So we're looking at Tesla. Let's just say that we bought it at, right now, what is the current price? 320.
20, yep.
Let's just say 320. And for next week's expiration, we just do it for 300 shares, again, to be consistent here. And we look of what premium we can receive right now at the 340. Oh my gosh, this is crazy. Look at this. I'm going to zoom in because this is where. So right now, you can collect $565 or for 300 shares? $1,695 to sell Tesla $20 above the current price. So what does this mean for the overall position? This is where it gets crazy, right? So let me just zoom in again and show you why this is so awesome. So if you would have 300 shares of Tesla that you buy at 320 and you sell it at 340, you make 20 times 300, $6,000. Cool. That's what we see here. By adding this layer of options, instead of making $6,000, you make $7,695. Same move. Tesla moves only from 320 to 340. But you see how you now make $1,695 more than you would by just trading the equity.
And people can apply this even if I'm a swing trader, not an investor, right? Like you could even day trading, right? Like I could, if I think Tesla, if I want it at 300,
right,
and let's just say because of some odd reason, maybe it's technical based, whatever it is, I go ahead and sell my put at 300. I collect that premium.
Yes.
It gets to 300. I get assigned.
Yes.
I get assigned 100 shares, or in this case, 300 shares
Yep.
at 300.
Yes.
And then if at that moment, now I'm trading it as an equity, right? And I already collected the premium.
Right.
I already went to my account.
Yep.
So now my break even's lowered,
Right.
as you mentioned. And so now I can put my regular stop as if I'm day trading it or swinging it, whatever you decide to do.
Right.
And it ends up being a regular trade again, but you collect a premium that you didn't have prior. Is that correct?
It's correct. So it's basically just adding more money to the stuff that you're already trading. So if the trade that you want to do is anyhow to buy it at 300, and then let's say you want to sell it at 360, right? Because that's where we had the most recent high. So you can do this, and in addition to making the $60, you collect premium while you're buying it, and you collect more premium while you're selling it. So basically, this is where if you would trade 100 shares, and you would make 100 shares, and it would be $60,000 that you're making on this move, right? Instead of making $60,000, you make, I don't know, probably around $65,000, $66,000. So you're kind of adding on 10% to what you are already doing. And as I said, if you get assigned at 300, you start treating it like a regular trade with your stop loss, whatever you have in mind there, with your profit target. You just add one more layer to it.
And if you don't get assigned, you still collect the premium.
Yep.
And you never got your entry, so it just expires, and you just keep the money. You don't have any other risk at that point?
No, you don't. And you do it again
really cool.
and again and again. So
Because,
you see, while you're waiting, and this is
you
where
get paid to wait.
Let's just say that Tesla is not going down to 300 right away. Let's say it stays up here. But you say, I want to buy it on this pullback. So do you the first week, and the second week, and the third week. So let's say you collect $4 here, $4 here, another $4 here. So now you moved your break even $12 lower. So you have the 300 minus 12.
Yep.
So now your break even is already at 288. So while you're waiting to get into this trade, and this is where we can talk about Walmart. I mean, Walmart is a trade that you say, you know what, I'm interested in trading Walmart. And Walmart is just right now up, and away. If we zoom out a little bit, we see it just moving higher and higher and higher.
Yep.
While you're waiting on this pullback, you can just sell puts until it comes back to the level. And the cool thing is, you can determine your level every week. So if right now you say, well, yeah, it's trading at 85, I want to do it at 82. And if it keeps going higher, you say, you know what, I'm okay buying it at 83 or at 84. That's the cool thing. You can adjust it every single week and kind of use it like I don't want to say a trailing stop, but a trailing entry.
You know, is there any major risk that I'm adding to my position by doing it this way? Just curious. Like, is there any risk that I'm not aware of because I'm just ignorant to options that when it comes to doing this?
So let's talk about the risk. So here's what could happen. So let's just say today is November 14th. And we are selling the expiration of November 22nd.
Okay.
So this means it only matters where Tesla is trading on November 22nd. And it is either above 300 or below. Whatever Tesla does in the meantime, we don't care.
Okay.
Now, what could happen is that Tesla starts moving sharply lower. And on November 22nd, it is trading, let's say, at 260. So now you are assigned at 300, so you have to buy it at 300, and it's trading at 260. Now,
Yep.
you could not place a stop loss before you got assigned. So I would say that's probably the only risk.
Yep.
And this is why I like to trade these options very short term. So on Monday and Tuesday, I'm trading this Friday's expiration.
Okay.
On Wednesday, I do this Friday and next Friday.
You take two
On
positions.
Thursday, no. It's either this Friday or next Friday,
Okay.
wherever I get enough premium, right? And on Thursday, I'm trading next Friday. So this basically means that I just need to know where will the stock be a week from now. And this is why I consider it lower risk.
Yep.
And I know that many people like to trade the wheel strategy and collect more premium with monthly options. I like to use weekly options. And I rather collect a little bit less,
Yeah.
but we've talked about it previously in the show.
so
I'm a big fan of the SRC profits, right? So this means systematic, repeatable, oh God, my handwriting, and consistent. You get the idea.
Yep.
So this is why I rather do this every week over and over and over again. So I rather do $4,
Yep.
$4, $4, instead of doing $12, and then I don't have control,
Yeah.
right? I take a little bit less, but consistently out of the market.
It almost seems like, and maybe if I'm understanding correctly, you could technically never get your entry that you want, but because you're, hopefully being disciplined, you're trying to wait for your good entry, you can still just make money as you wait consistently. Even if it never hits your entry and you keep on doing this and you're like, man, it's never hit my entry, but I'm still collecting premium.
Yeah.
Which is, to me, it just feels like it's something, why did I not know about this? like, why did I not know about this? It's like, why am I not knowing about this? I'm sure a lot of you are thinking the same thing. So is this, can you do this for those who are not aware? Like, can you do options pretty much on any platform, or is there specific things that they should be, when it comes to doing this type of strategy, they should like really look for?
No, you can do it on any platform. So if you have never traded options before,
Yes.
you might have to apply for options permissions with your broker. But that's easy enough.
Yep.
Call your broker. Now your broker will ask you, do you have any experience trading
Yeah, you
options?
bet.
Right? And
Yeah.
so this is where, we've been talking about, it makes sense
Yeah.
to do this maybe on a paper trading account first to get some experience,
True.
right? To just run through some hypothetical scenarios before you commit real money to it.
100%.
Because if you buy a put instead of selling it, the exact opposite things happen, right? You're paying a premium instead of collecting a premium. So you
okay.
want to make sure that you have kind of the basics of options down, and that at least you know how to place an options trade on your platform.
Speaking of the basics, what would you recommend people? Is there like a book or is there like a video that you feel like is really good to get like at least a good foundation of understanding options before they start trying, the paper account and so forth?
There probably is. I've done a video of
Yeah,
Options
sure.
101,
Yeah.
right, that I have on my channel, and maybe we can link
Yeah,
to it
we
in
can
the
definitely link that.
description, right, that basically just breaks it down in very simple concepts. Because honestly, for this, you don't need to know about iron condors and broken winged butterflies and all this crazy stuff. And you see, the other thing is, when people talk about options, they talk all about the Greeks, right? They talk
always
about
talk theta
delta
and-
and gamma and all of this kind of stuff. We haven't been talking about this at all because you don't need it. You see, if you look at what I have here as my essential data, I know, okay, how many days do I have to expiration? What is the so-called strike price, meaning at what price do I want to buy it? How much premium do I receive? What discount am I buying it at? So if right now it is trading at, 320?
Yep.
And 300 would be a 7% discount. How much money do I need for this trade? And we did put delta in here. Forget about the delta. Nobody needs the delta, right?
Yep.
Because you just need to know how much money do I need to put up for the trade. Now you might say, $30,000, are you kidding me? Well, trade something else. Trade, for example, Coles, right? I mean, here we see Coles is just going sideways in a channel. And this is where you could, right now, Coles is trading at $18.45. You can pick it up at $17.50, which is a 5% drop. So 5% below the current price, and you're getting paid 20 cents. So that would be $2. But you see, you only need $1,750. So you can do this on smaller accounts. Absolutely. You just need to pick a stock that has a lower price. Another stock.
Quick question. Is there anything we have to be aware of in terms of like, are there some stocks we can't do this to? You know what I'm saying? Like, is there, like in day trade, I'm thinking volume. There's got to be someone there to take that.
Right.
So is there something that could happen that we pull this up and it doesn't work? You know what I'm saying?
So here's the cool thing. I like to trade weekly options. And weekly options are only offered on stocks that have enough liquidity. So it's kind of a built-in filter.
It's like a built-in filter.
Yeah, if you worry only about weekly options, you automatically filter out a bunch of stocks that don't have options at all or only have monthly options. And this helps with this is why I'm not really paying attention to the volume. I don't use this as a filter at all.
You didn't bring it up. So that's why I'm asking, because I just don't want anyone to look at this and be like, oh crap, like I skipped that step, So I'm glad you brought that up.
Well, so there's two important things to the strategy. Number one, you only want to trade this on companies and stocks that you do want to own. So the number one question before applying this strategy is, do you mind owning stocks of American Eagle Outfitters or Amgen or, Coles or Tesla? And secondly, is it okay for you to own it at the price, so at $300?
Right.
If you can say, yes, I love to have Tesla at $300, great, because then honestly, you shouldn't worry about it if Tesla moves to 280.
Yep.
Because you probably already have a plan right now of what you will do if the stocks drops from 300 to 280, 270, 260, right? This is where you treat it like a normal equity trade.
And you always should have a plan. Like you should always have a plan, because if you don't, you shouldn't be trading. That's
right. And you see, I'm glad that you mentioned it. And you see, for me, a plan has just some very simple elements, right? So first, you want to know, what do you trade, right? So do you want to trade Tesla or Coles or Walmart or So number two is, where do you want to enter? At what price? Number three, where do you want to exit? And this exit with a profit or exiting with a loss. Yeah. And number four is, how much do you want to trade? And this is the position sizing. Yeah. Do you want to trade 100 shares, 300 shares, right? 32 shares? I mean, these are the basic elements. And for every trade, you just write this down and say, okay, you know what? I want to trade Tesla, and I want to enter
300
at 300, and I want to exit with a profit of 340, and I want to exit with a loss of, let's say, 280 if it goes down to 280, and I want to trade 300 shares. The end. I mean, a trading plan doesn't have to be super complicated, but you should have this before you enter the trade. But that's probably a completely different topic.
And what's interesting is when you say you want to own this stock, that could also mean own it for, like, as day trader, that can be just own it for that day or for that week. And then I can still, you don't mean own it like as an investor, right?
No.
Okay,
Because
gotcha.
You see, if you get assigned on Friday, these shares will appear Monday morning in your account. And you could sell it right away. You could sell it in the pre-market, you can sell it in the open, you can hold it for a few days. You can treat it as a day trade, or you could hold it for a few days. You don't have to hold it for a long time.
I really love that. And look, Markus, is there anything that you feel like maybe I'm not asking because I'm just not aware of it to ask when it comes to this strategy? Is there anything I'm missing here?
I think the important thing is, what we talked about, that you want to own the stock, because many traders are trading the strategy just to collect premium. And they hate assignment, which basically means that now you own the stock. Because then they say, oh, I'm getting assigned. And they either don't have enough money in the account to buy the stock because they got carried away by the premium, right? Or they said, oh, Tesla is now trading at 280 and I have to buy it at 300. And no, I want to buy it at 280. Well, that's kind of the insurance. You're getting paid for taking this risk, right? So this is where I think the important thing is, first think about the trade that you want to do, like the Walmart trade, where you say, I have a level where I want to get in. I love Walmart as a company. I want to get out at this level, and then add this as another layer to it. This is how you're doing it right. If you're doing it the other way and say, oh my gosh, right now, if we look at the stocks and we have here, for example, oh my gosh, X right now gives us a lot of premium, US Steel. Well, it's because Trump will be the next president, right? And he probably will support US Steel, whatever it is, right? This is where right now you would get a lot of premium, but you say, I never want to own the company. Well, don't start with this trade to go in the first place. First, make the decision that you like the underlying stock. Secondly, make the decision that you like the price. And then third, have a plan of what to do once you own the stock. And I think these are the important things. And as long as you do it in this order, you'll be just fine.
Well, look, everyone, if you have more questions, because I'm sure you're going to have more questions, like where can I learn more about Markus? Why didn't you ask this, Alex? And I'm sure you might be thinking that. Markus, where can they learn more about you?
Well, my name, markusheidkotter.com, or I have a company, rockwelltrading.com. Easiest way probably, just search for me on YouTube here. Because this is where I have tutorials how to trade the wheel strategies. I have videos that talk about the dangers of the strategy, the risks of the strategy, right? How to pick the best stocks if you don't have a stock that you already like. So there's tons of videos there.
Well, look, Markus, I appreciate you so much sharing this with me, because this is a whole new realm for me, and you made it very simple for me to understand. So I really appreciate that, brother.
All right. Thank you so much.
Thank you. Thank you for finishing today's episode. If you're watching on YouTube, please leave a comment below of one of the takeaways that you are going to implement into your own trading. And if you happen to be listening on a podcast platform, go ahead and leave us a review and let us know what you enjoy about today's episode, because that does go a long way in helping us continue to grow. Again, thank you from the bottom of my heart, and I look forward to seeing you on the next episode.